Do you think that that's obtainable for a Bitcoin to be worth 600,000 by 2030 or 500,000 by, within 5 years?
Well, historically, what's happened is Bitcoin leads, followed by the alts, and last of all, the memes just before the crash.
Yes.
Um, and then it unwinds in that order.
Stock Up with Larry Jones. Make sure you hit the like, subscribe, and notification bell. This is an episode that you must watch from beginning to end. We have our guest, our friend back, our cousin, Fred Theo. Fred, say hello to the people.
Hi, everybody. Glad to be here again.
Hey, a lot of people want to know a lot of questions. They have a lot of questions about Bitcoin miners, and we're just going to get right into it. Right. One of the questions I want to ask you with the inflows and outflows of institutional money now that the spot ETFs have been approved, how do you think that's going to affect the crypto cycles?
So I think what we've been seeing is a combination of people who bought into GBTC in 2022, 2023, when it was available at a discount. I think at what point it was trading at a 43% discount. Who, when you think about it, if you bought in at a 43% discount when Bitcoin was at $15,000, and here you are with Bitcoin around $70,000, there's a lot of profit to be taken there. So you have people who are liquidating out of GBTC and either reinvesting that money in other ETFs or just doing something else with the money. So you've had about a 50% drawdown in GBTC's Bitcoin holdings. By the same kind of token, no pun intended, you're seeing a large inflow into the other ETFs. And I think 4 of the 11 ETFs were essentially the 4 most successful ETF launches ever. So, an amazing amount of inflow that's actually gone into those funds. I don't think personally that a lot of that inflow is institutional. I think a lot of that is still retail. I
Yeah.
also think a lot of that inflow is active traders. And by that, I mean the ETFs settle T+1, meaning that when you buy shares in the ETF, they don't actually go buy or sell Bitcoin until the day after.
Oh,
And
that's cool.
that is the stock exchange day after. So if you buy a share in, for example, the BlackRock's ETF, they're not outsourcing that Bitcoin until Monday.
I got to ask a BlackRock question. Were you finished? I'm sorry.
Yeah, that's fine.
I got to ask a BlackRock question, and this is and if you can't answer it, I understand. There's a lot of fear with BlackRock owning a lot of the Bitcoin, having major shares in the Bitcoin mining companies. Can you shine a little light on that? Because some people think it's a vertical attempt to own Bitcoin vertically, one massive company. What do you
Mm-hmm.
feel and think about that?
Well, BlackRock is a very large financial institution with lots of different funds. Their global fund has been buying Bitcoin, I believe, since 2022, early 2023, and they accumulated a fairly large position in spot Bitcoin there.
Hmm.
Their index funds buy shares in public companies based on the indexes. So if they have a Russell 2000 index, then they will end up investing and large positions in mining stocks because a lot of the publicly traded miners are part of the Russell 2000. So you have to look at the difference between managed funds and unmanaged funds. And so their index funds, just like Vanguard, Fidelity, and others, are all big investors in the miners, but that's unmanaged money. The funds have to buy the shares because the shares are part of an index. So I'm not a big subscriber to the belief that any financial institution is trying to in any way capture or vertically integrate the Bitcoin market. the typical position that any fund has in a public miner is going to be somewhere under 10%. And at that level, they don't really have any say in how the company is run. They don't have any real say in what the company does. So the strategic value outside of just the investment value is not there from a conspiracy perspective. Now, from an investment perspective value, the miners are a great way to get additional beta. It's this, by the same way that Warren Buffett buys gold miners versus gold itself. When the market is going up, the miners collect additional profits that in theory should impact the share price. Now, this begs the next question. Well, if Bitcoin is up so much, why aren't the miners up? And what you've seen is since the ETFs came, the ETFs provide now a way for people to get exposure to Bitcoin, spot Bitcoin, without the foibles of owning a miner, right? Because when you own a miner, you're susceptible to halvings. And what is it that happens in just a couple of weeks? We have a halving. So you've seen people cycle out of miners into spot Bitcoin, whether that's through ETFs or other means, before the halving to see what the impact of the halving is. And then my belief personally is that you'll see people cycle back into the miners once the risk is kind of understood as to how they're going to be negatively impacted. The advantage for the miners today is that Bitcoin price is at a place where even with the halving, the vast majority of miners will still be profitable operating their businesses. So I don't think that there's a crash coming to the miners at all. I think if anything, the Bitcoin price would have to be 40,000 for there to be fear amongst the miners, I think. But with Bitcoin at 70,000 and the average cost to produce a Bitcoin across most of the miners being somewhere between high teens, mid 20s, you double that cost and you're still profitable as a miner. So I think that the situation is really just more one of people technically analyzing the market and saying, there's a halving coming, miners will be negatively impacted. Let me sell while the miners are still at a reasonable valuation. Let me buy spot Bitcoin. And then if the miners' pricing drops, I can sell spot Bitcoin. I can go buy miners and ride that up again. So this is all about the maturity of a financial investment opportunity around this space. You have spot Bitcoin, you have futures, you have derivatives, you have the ability to invest in miners. You have all sorts of things you can invest in around this asset class, which makes it very attractive to institutions who want to trade it. To get large pension funds to invest in it, and I had an interesting breakfast the other day with one of the first pension funds that invested in a spot Bitcoin. And it still takes a lot for one of these institutions to pull the trigger to invest in spot Bitcoin or an ETF or even equities in a miner, because of their fear of regulatory risk. And now with the ETFs, some of that fear has been ameliorated. I think we'll continue to see that fear subside over time. I think the regulators outside of Senator Warren trying to do things, I think most of the regulators have kind of put their pens down regarding Bitcoin and said, okay, fine, Bitcoin is here to stay. We have the ETFs. We have these publicly traded companies. So I think that as we look at the cycle, what you're going to see is the greater amount of demand than we historically have seen because of the ability for these investors, pension funds, retirees to now hold spot Bitcoin and invest in Bitcoin. You're seeing more and more people recommending a 1 to 3% allocation in Bitcoin as being a great way to balance your portfolio. And I think that a lot of people are going to start doing that. We haven't seen a very strong beginning to that yet because we only had these ETFs approved in January. Yes. So I think by the time we get towards the end of this year, you'll start seeing more of this continued drumbeat. But the impact on the traditional cycles of Bitcoin, where you historically would see Bitcoin price 6 months after the halving hit the prior all-time high, and then 12 months after that hit a new all-time high. I think that timing of those cycles has changed. I think the ETFs pulled forward some of that appreciation in price that otherwise would have happened this fall. So I think we've kind of preempted that. a little bit like what may have happened in 2021 in the May price peak that we hit back in 2021.
Hmm.
And then we'll see what happens. I personally am very bullish about the price of Bitcoin. I think it's going to continue to appreciate. We may very well have some pullbacks, and we've had some days with up to 10% intraday pullbacks.
Yes.
But that's just part of the volatility. There's very little liquidity on exchanges. There's not a lot of Bitcoin available to be bought or sold. The ETFs have been sucking up upwards of 2,000 plus Bitcoin a day, uh, which is less supply for the rest of the market. And we're now starting to see some of the older long-term holders starting to sell some of their holdings. And what the market needs from a maturity perspective is lots of liquidity. We have to grow the amount of Bitcoin being traded every day
Right.
for there to be more interest from institutions, because as long as there's high price volatility, you won't see the pension funds coming into the asset class in any big way. They'll put their toes in, but what we need is bigger amounts of liquidity. So more Bitcoin being traded every day, that will add more traction. And then as the value of the asset class goes up,
Hmm.
then pension funds will be able to allocate greater percent of assets to it.
You think GBTC, Grayscale, you think, number one, you think they will eventually, it looks like now they will begin to slow down the outflows. That would probably positively affect Bitcoin. This is a two-part question. And here's the bigger part of the question. Do you think that after the halving that Bitcoin has actually will be more bullish, or do you think most of the bull run will be before? So will most of the Bitcoin run be before the halving or after the halving?
So you have to think about, there are two things that drive pricing in markets. One is excess demand. The other is, excess supply, or the contrary to both, drop in demand or a drop in supply. So what you have now going on is an increase in demand because of the ETFs, right? 2,000 Bitcoin per day are going into the ETFs.
Right.
You have at the halving a decrease in supply by 450 Bitcoin a day. I go from 900 Bitcoin produced a day to 450. Will that cause Bitcoin to run up in price? Well, I think it's the combination of the two things, because the halving only affects investors in Bitcoin from a supply perspective. There will be less supply. It has a much bigger impact on the miners because their revenue gets chopped in half.
Right.
But from a perspective of Bitcoin investors and as an asset class, the halving will act as further acceleration to the demand that exists. And so, provided demand remains the same, 450 Bitcoin will have to come out of people's wallets that before was coming from miners selling. And so I think at the same time, you've also been seeing miners have been hodling.
Right.
And as Bitcoin price goes up, miners have to sell less Bitcoin than they were before, because at the end of the day, miners operate in fiat. And so they have cash needs that are driven by fiat. And as Bitcoin price goes up, they sell less Bitcoin to cover that fiat need.
Kathy Wood came out with a bold prediction on Bitcoin. I'm going to ask that after this question, all right? Because you brought up a good point. You guys, I believe you guys announced earlier this month that you had to sell some Bitcoin, right? I want you to explain what you're doing as far as your balance sheet, how much Bitcoin you sold, how much you plan on holding, and how much you plan on accumulating.
Sure. So, all of 2023, we were selling an equivalent amount of Bitcoin in fiat terms to our operating expenses. So we made the very public statement that we use equity and debt to fund growth. We use Bitcoin to cover our operating expenses. And as the price of Bitcoin has gone up, it's become less attractive for us to sell Bitcoin because we obviously want to hold it more. But also the amount of Bitcoin we have to sell is much less to cover our operating costs, because our operating costs haven't gone up that much. And so the first few months of this year, we didn't sell. and had the benefit of that big run up in price. We have since then started selling again to cover operating expenses. And we sold a small amount of Bitcoin last month to do that. And from time to time, we will sell Bitcoin to cover operating expenses as we see fit. If you look at most recently, we've had a lot of cash on our balance sheet. We've had a lot of Bitcoin on the balance sheet. As of the last public report, almost $1.5 billion between the two of them. So there hasn't really been a need to sell Bitcoin because of the amount of cash. But we've also done some acquisitions recently. We're in the process of closing the most recent acquisition. So there'll be some cash going out the door to pay for that. And so you'll see over the balance of this year, from time to time, we will sell Bitcoin to cover operating expenses. Generally, we're a hodler. We have almost 17,000 Bitcoin on the balance sheet.
Right.
We produce well in excess of the amount of Bitcoin we need to cover our operating expenses at current pricing levels. And so we're able to, continue to hodl a large percentage of the Bitcoin that we mine.
Yes. That scared a lot of people, as you know, when you made that announcement, and people were concerned about Mara. And I can still see that by market cap, you're still the biggest Bitcoin miner out there, right? When we last talked, I asked the question, why do you think Bitcoin miners sell off leading into the halving? This year, they took off before the halving, and now it seems to go back to what's kind of standard. And we do know that's mainly driven because of how people trade it, right? Can you address that a little bit? And then I want to talk about where you see Bitcoin going to.
Sure. I mean, I think anybody who looks at the business model of Bitcoin mining understands that at the halving, your revenues get chopped in half. And so in theory, that has an impact on profits, which have an impact on the value of the company. And so it's very typical to see a sell-off in miners leading into a halving. And then after a halving, you have another run up again. And so I think there's always this notion of people ride waves, investment waves. And when an asset goes up in value, you invest in it, you hold it, and then when you think there's going to be a downturn in that asset, possibly you sell it. So that's the historical trend behind this selling miners into the halving, because their revenues are going to be impacted by the halving. That doesn't impact their belief in the value of Bitcoin, because Bitcoin per se, it typically is not negatively impacted by the halving. And so people will rotate from miners into Bitcoin, just as they've done this time again. So I think we're just seeing that regular pattern repeat itself right now.
Who will survive? Let's talk about survival of the Bitcoin miners. And I know you can't say who will survive, but a general, how many companies you believe will survive, because the crypto winter is brutal on companies like yours. And we know that. And that's why you guys have to position yourselves before the winter. Let's say there's 20, Bitcoin miners out there. How many do you think will survive?
So I think there are a number of different dynamics going on. Typically, Bitcoin miners depend on access to three things: capital to grow, capacity to plug miners in, and then compute, which are the mining rigs themselves. And at any given time, typically in the market, there's a shortage of one or two. Rarely is it all three. We're going into the spring and summer, if you would, of this Bitcoin cycle, with a very strong price in Bitcoin and miners being very well capitalized. All of them have a lot of cash on the balance sheet. The bigger ones have access to being able to tap equity markets, and profit margins are looking quite healthy. A lot of big orders have been placed for equipment. You don't see a lot of debt. And that's the killer of miners in the winter period, is when they have debt and they have equipment financing, and the equipment financiers foreclose on the miners, et cetera.
Hey, good people. Hopefully you are enjoying today's video with our guest. Listen, I'm going to take 30 seconds to remind you, for those that have not yet, make sure you hit the like, subscribe, and notification bell. Please leave us a comment on today's video if you would like to see more interviews like this. And lastly, This is brought to you by Stock Up You. This will be the top link below in the description. All right, come and learn the best in stocks and crypto, taught by people like Stocks with Josh, with charting options by Keenan Grace, myself. You got Mommy Trader with investing, dividend and investing, and we got Stock Curry with basic fundamentals. Come and join the family. Invest in yourself first. And now back to the interview.
Going into this cycle, it's all really going to depend on the price of Bitcoin. If Bitcoin drops down and is in the 40 to 50K range, then you're going to see a lot of smaller miners have to basically pack up and shut down operations because they won't be profitable. As long as Bitcoin remains north of there, that incentive shouldn't be there. Now, you also have a large number of machines out there that are less energy efficient than the industry average. Industry average is about 30 joules per terahash. By way of example, Marathon's fleet averages about 24 joules per terahash, which is substantially better than the industry average, which means we need less energy to produce the same amount of Bitcoin. And there are machines out there that may be 30, 40% of the fleet that make up the global hash rate that are going to be borderline efficient. Now at 70K, they're still efficient, but if the price drops to 60, 50K, those miners will have to be unplugged. That'll be a drop in global hash rate, which will make the other miners more successful because at the end of the day, it's a zero-sum game. We're competing for a finite number of Bitcoin every day. The fewer miners mining, the more Bitcoin there is for everybody who's still mining. So it really comes down to financial viability. The business section of the industry that I think is most negatively impacted this cycle will be anybody in the third-party hosting business. So if you think about what Marathon has been doing, historically we were an asset-light company. We leveraged third-party companies who invested in infrastructure capacity. So the only thing we would invest in is compute or miners, and then we could grow very rapidly, which we did in 22, 23. Now, more recently, we've been vertically integrating. So we've been acquiring our third-party hosting partners. Why? Because by extracting, removing in a way their profit from the value equation, it lowers our cost. And so We've been lowering our cost to mine by 20% at each site where we do this. Plus, these sites typically have capacity beyond what we're using, which means it gives us growth capacity. We are today at, we own about 53%, once this last acquisition closes, of our mining capacity. And so we've gone from 3% to 53% in about 4 months. And we'll continue to acquire to vertically integrate that even more. So these companies that historically have been third-party miners, very few people will be able to afford to pay hosting fees to mine going forward. And I think the biggest impact is anybody who's in that third-party hosting model is going to be negatively impacted. And you can see the previous large third-party hosting companies, Core, Riot, have all moved to proprietary mining, self-mining as their primary business.
Yes.
And so I think you're going to continue to see that. And then it's the smaller privately held miners that don't have access to capital that, while they may remain profitable, they won't have capital to be able to invest in growth. And so they will start falling behind. But if you look at the amount of global hash rate controlled by the publicly traded miners today, it is decreasing. And that's not because the publicly traded miners are not growing. It's because non-public international miners are growing much faster. And so you're seeing a lot of new mining capacity coming online in the Middle East. You're starting to see new mining capacity come on in Africa. You're seeing more mining capacity come on in South America, all of which, to a great extent, is non-US companies. We're one of the few US miners that operates in the Middle East and operates in Latin America, and hopefully soon in Africa. So this is really all about diversification. I think the industry is growing up, and you're starting to see some saturation in the US. The biggest driver of that is nowadays the Bitcoin miners have to compete with the AI data center operators for sites and capacity. And so that's what's driving miners offshore. And we're certainly very focused on having by 2028, the next halving after this one in April, 50% of our revenue coming from offshore mining capacity. We think that that's going to be critical. The other thing we're doing differently than our peers is we've built a vertically integrated tech stack, everything from the pool software down to our immersion technology. We had a very successful launch of our two-phase immersion technology at the Empower conference last week in Houston. And by doing that, we're now diversifying our business. So we'll generate revenues from mining, we'll generate revenues from our technology business, and then we have an energy harvesting business that we've talked about that will start operating really more and more this year. And so we believe that you have to be a fully diversified miner. You have to do utility scale mining. You're going to have to do some form of energy harvesting to average down your energy cost. And then you're going to have to do something that generates revenues that ameliorates the swings of the halving cycles and that help you when transaction fees are low. Because in 2028, when only 1/16 Bitcoin are awarded per block, for miners, it's going to become tough unless transaction fees have grown a lot. And the Bitcoin price has gone up, way up. So back to your Kathy Wood comment,
Yes.
If Kathy's correct, then it's less of an issue. But we have to plan. We have to plan differently than that. So
let's go right into the Kathy Wood's prediction. I believe it was one Bitcoin 600,000 by 2030 ish, and we do know that these are educated guesses, so we're not holding that against or to anyone, right? Do you think that that's obtainable for a Bitcoin to be worth 600,000 by 2030 or 500,000 by, within 5 years?
Well, I think it's all about supply and demand. And the good thing with Bitcoin is supply is finite. So unlike gold, unlike oil, unlike any other industry where you can just produce more if there's demand, in the case of Bitcoin, you can't. There will only ever be 21 million Bitcoin. We've already mined almost 20 million Bitcoin. There's only 1 million Bitcoin to be mined in the next 120 years. So what that says is supply is limited and will be finite. As long as demand continues to increase, price has to go up. There are many people who have said there will eventually be a period of time where only the richest billionaires will be able to own one Bitcoin.
Yes.
Think about it.
Right.
There are only 21 million Bitcoin. There are a lot more millionaires than there are Bitcoin on this planet.
Yep.
And today we're already at a place where every millionaire can't own a Bitcoin. So price is only going to appreciate over time. And just like art, when an artist dies, their work continues to go up in price over time. So I think eventually Bitcoin could very well get to be $1 million per Bitcoin asset. Question is when.
Do you think there's a possibility? I'm going to dig down into this question. Do you think there's a possibility for one Bitcoin to be $500,000 by 2030? Is there a realistic possibility?
So if U.S. pension funds were to allocate 1% to Bitcoin, so there's arguably $43 trillion of assets under management by these funds. So 1% of $43 trillion, that amount of demand on Bitcoin would raise the value of Bitcoin significantly, well beyond that price.
Okay, so let's talk about crypto cycles now. Like you're saying, if everything is Bitcoin remains above 50,000 and the demand keeps going up, right? And the price keeps going up year over year. How will that affect the Bitcoin cycles? Do you think that instead of these massive drops in the crypto winter, you think Bitcoin could become like the Dow or the NASDAQ where, we get a 10, 20% pullback, 30 tops rather than falling by 80%?
So what has made Bitcoin attractive to traders is the volatility. As Bitcoin's volatility decreases, and it has been decreasing, the most recent drawdowns have been 10% or less. If we were to see another 80% drawdown in value, it would definitely have a severe impact on the industry. The question is, what would it take for that to happen? Well, it would likely be some systemic shock, like it's prohibited or something like that.
Right.
So I don't foresee an 80% drawdown in the next cycle. Could there be a 40 or 50% drawdown? Possibly. It's hard to tell.
Yeah.
It is very much.
I guess my question, if I would forgive me for interrupting. I guess my question is more defined. Do you think the falls in crypto winter, as far as the price of Bitcoin, will become less and less?
Yes,
There
absolutely.
you go. Yes. Okay. Explain why.
But realize, so as the holders of Bitcoin become larger in number, and even though the ETFs will be concentrations of ownership, the shareholders of the ETFs will be, hundreds of thousands, if not millions of people. And so the decisions regarding do I buy or do I sell are not an ETF manager, it's individual investors. And so as you broaden the holdings of Bitcoin, the price swings will ameliorate, meaning they'll become less.
Right.
For two reasons. It's not just the downside that gets less, but the upside also is impacted because it's volatility. So if you have less downside swings, you'll likely have less upside runs. But it's all going to be driven by supply and demand. And given that there's a finite supply and given that supply continually decreases, then as demand continues unabated, and by that I mean, even if demand stays constant to where it is today, the inflows remain constant, there will be upwards pressure on Bitcoin price. And it will continue to move upwards. So now, that being said, you may have some whales that decide that, hey, now's a good time to liquidate. And so you'll see these drops, and it may be a 5%. Realize also, as I said earlier, because these ETFs settled T+1, there is a certain amount of trading that people are doing where they know that the ETFs have to buy a lot of Bitcoin on Mondays and Tuesdays typically, less on Wednesday, less on Thursday, and very little on Friday. And so they trade around those patterns. And so you'll see Bitcoin price move up slowly over the weekend, and then there'll be a bunch of buying Monday morning, and then price will gyrate a little bit.
Right.
But you're definitely seeing trading patterns appearing now between the ETFs and the spot market and derivatives. And, that'll continue to develop over time. And I think that we'll see continued upward price pressure, at least as long as this demand continues.
Thank you so much for allowing me to dig down on that question and a sufficient answer. I have two more questions. One is, and it's unfair to ask you this question because I'm going to ask a question about alts, right? If Bitcoin continues, and what I see Bitcoin doing, it is exactly how you suggest that it could go, right? I know, and my audience know, anything that you say or I say is not a suggestion for anyone to buy, hold, or sell, right? But if Bitcoin continues this path where it falls less and less in the crypto winters, and the price climbs higher and higher, do you think the alts will follow? Now, knowing that if the alts will follow, of course, the memes and all of that will follow. But let's deal with the alts, layer ones. Do you think that they will follow?
Well, historically, what's happened is Bitcoin leads, followed by the alts, and last of all, the memes just before the crash.
Yes.
And then it unwinds in that order, right? So will that happen this time? Listen, I think people make money in the upswing in Bitcoin, and then they start investing that free money, if you would, the house's money and other things like alts and other things, and they do that. And then as soon as there's a change and they have a liquidity call or a need for liquidity, then they unwind those positions. So I think there will always be a follow-on effect. It's not unlike in the traditional equity markets. The first couple of companies that announced their grandiose AI plans go public, raise lots of money, and then you have a bunch of other companies doing something tangential to it who, add .ai to their URL,
Yes.
and all of a
Yes.
sudden they're getting an AI valuation,
Mhm.
and then people figure out, oh, this isn't serious or this isn't real. The altcoins may be very serious and very real. I'm not deprecating them in any way, but what ends up happening is, Bitcoin is the lead dog. Bitcoin is the biggest asset by volume and by market cap. And when people make money in Bitcoin, they look at other places to invest it, right? And if they
Right.
know that historically alts follow Bitcoin, then they will say, well, alts haven't run up yet, so I'm now going to move some Bitcoin money that I've made into alts, let the alt run up happen. So as long as that psychology persists, the pattern will persist.
Last question. Thank you so much for really digging down on your answers. Fred, last question. Mara in specific, what do you guys have in the hopper? What are your plans going future? What do you want the public to know about your company? And if you want to add anything of where you see um, um, growth in other areas with crypto, in undervalued or under served countries, right? Add that in there too, and just give me a full-on answer.
Sure. So I think as you think about Marathon, we have three core businesses today that we're working on. One is utility scale mining. This is the traditional. We go in, we work with a power company to take and buy a large block of energy. And
Yes.
then we work with that power company to balance the grid by shedding that load anytime they need us to do it. And that's something we do very willingly and collaboratively with the energy companies. We've been doing that typically in the US. We do it in the UAE, in the Middle East. We also do it in Paraguay. And we're now starting to look at projects in countries like Kenya and Tanzania and other places like that. Marathon was the sole mining sponsor of Power in Africa, which was a conference in Washington held a few weeks ago where we worked with the heads of all utility companies for a lot of the countries in Africa and talked about the benefits of Bitcoin and load balancing. So we're very big believers in the African continent as a future for Bitcoin mining because there's lots of stranded energy there, and they need offtake. They need people who can consume energy, and so we provide that offtake for them. The other part of our business, which is developing now, is energy harvesting. And in energy harvesting, it's a different model. Instead of soaking up 100 megawatts, 200
Mm-hmm.
megawatts of power, we're going in and finding stranded methane gas that's either coming out of landfills, it may be coming out of flares on oil fields, it may also be in the form of biomass, rotting, whether it's manure, whether it's agricultural waste, whatever it might be.
Yeah.
Convert that into energy, and then convert that energy into heat. Now, why am I talking about making heat versus making Bitcoin? Well, the way we make heat is by making Bitcoin, because
Right.
Bitcoin miners are extremely efficient at generating heat. 95% of the energy that goes into a miner in the form of electricity comes out in the way of heat. Using our two-phase immersion technology, we can capture that heat and essentially deliver it as water or a liquid that's heated at 50 degrees centigrade, which is more than enough for hot water, more than enough for heating buildings, more than enough for heating shrimp farms, heating hothouses, and preheating things for factory processes where you need to heat liquids, heat fluids, heat things before you manufacture with them, if you would. And so we have been in very advanced discussions with a number of partners in different industries where we're able to develop potentially sites using 5 megawatts, 20 megawatts of energy that we create by taking biomass or methane or what have you, generating electricity from that, and then selling the heat back into the industrial process. Now, it sounds very convoluted, but essentially what you're doing is your cost to mine a Bitcoin is fully subsidized by what you're being paid to process the biomass or the stranded methane and the heat you're selling back. so that your energy cost, in theory, should be zero. Now, imagine a miner who is able to mine at tens of thousands of locations, small amounts of Bitcoin at zero cost energy. And they can compete more effectively than miners at utility scale who are paying fixed prices or variable prices for energy that are very dependent on energy markets. And that miner that has lower cost energy will always be more competitive. The last part of our business is our technology business, where we're building technology for miners, but also for digital infrastructure. Our two-phase immersion technology is very applicable in the AI world. It's very applicable in the data center world. It's very applicable in the datacomms world or telecom world. So we believe that by diversifying our business, by leveraging the technology assets we have, because we've developed this technology to make our Bitcoin mining more efficient and more optimized, we're able to generate alternative revenue streams. And you will continue to see Marathon focusing on mining as its core business, but leveraging the tangential businesses, the adjacent businesses of technology, as a way to generate very profitable cash flows that essentially continue to lower our cost to mine. We believe that in the long term, and I'm talking 2028 and beyond, miners must have businesses that generate cash flows from things other than just mining. Because if you just mine in 2028, it's going to be a very challenging business because the Bitcoin rewards will be much lower. Transaction fees may or may not compensate miners for that. The price of Bitcoin may or may not be in the right place. And those of us who are public companies and care about our shareholders, you need to really diversify the business to make sure that you're going to be there in 2028 and you're going to be there in 2032 and you're going to be there in 2036, et cetera.
Yep. Hey, thank you so much. I did have another question, but our next interview, because we're going to talk after the halving, I want to talk about consolidation, buyouts, potential buyouts of, larger Bitcoin miners to smaller Bitcoin miners. Thank you so much for addressing the effect of the growth of Bitcoin to underdeveloped countries. That's what I was trying to get to. I just wanted to say really quick, good people, make sure that you download and check out Stock Up You, which is our sponsor. Fred Theo, thank you again for accepting this offer to come on and be on our show for the second time. For those of you that don't know, he is the CEO of Marathon Digital, the world's largest Bitcoin mining company. Thank you so much, sir, and we will see you the next time. Right?
Thank
Live,
you.
love.
Great to be here.
Yes. Anything else you wanted to say? Because we want you to say it now.
No, I just really appreciate having the opportunity to talk with you.
The pleasure is mine, my brother. You guys know this is cousin Fred now. All right, this cousin Fred. All right, we'll talk to you later, good people. Live, love, laugh, and learn.